you believe in fundamental economics, then at some point this must be inflationary.
Inflation. You know, I think what we can say categorically is that the inflation scare from the relative price highs in commodities was a head fake.
Yeah.
It was a head fake and a massive cyclical turning point for the economy. This is profoundly deflationary. Yeah. We keep talking about monetization, quantitative easing, huge budget deficits. All of this is untested. Yeah? Japan has been the proponent and been the only one to pursue quantitative easing. Yeah? Where is the Nikkei 18 years later? Yeah? It's still making new lows. So quantitative easing isn't necessarily a panacea. And for all the talk about rising levels of government debt, it's occurring at the same time as corporate and personal sector debt is contracting. So they're cancelling themselves out and they're leaving us with this deflation. But I think you're right with your emphasis on index linked. Now you're saying 2% is the break-even level in the UK. You should be buying my American securities because the break-even rate is 6%. So I have a security in America where I almost want to lose money. I almost want to lose money on this thing because I can't lose money in real terms. I'm guaranteed 6 real, okay? For me to lose money, prices in America have to fall 6% next year and 6% the year after that. That's almost never happened. But let's say it does, and let's say prices fall 20% over that period. Do you know where the S&P will be? It'll be like 300 points, yeah? And I will have lost 10%. Okay, so, you know, I'll be a giant amongst dwarfs at that point. Likewise, yourself.
I mean, is there any emphasis on the index-linked element? I mean, it would seem to be a screaming buy. Senior portion of the capital structure, huge yield premium.
It is not. There's no such thing as a screaming buy. Wash your mouth out, you silly man.
Well, if you buy government debt, why not buy the bank debt that is guaranteed by the government, where you get 300 extra basis points?
The only sensible thing you can say is that there is a massive disconnect between the corporate bond market, the price that Vodafone's selling debt, and the price of its equity.
Yeah.
One of those markets is wrong. One of those markets has strategists and permabills, and one of them, called the bond market, has professional people. Okay, so my money's on the bond market, being more right than the equity market, right? But that's as bullish as I can get.
Yeah, well, they got GM right. Bryn, thanks a lot for joining us this morning. Bryn Jones.
Let's get back to Hugh. Peter writes in and says, can you ask Hugh where he thinks you can actually make money rather than just avoid losses, and also whether he believes we're seeing a Western version of emerging communism. Well, let's deal with the communism one after we've dealt with the one about where you might make some money.
I mean, he's right. Communism stroke fascism. I mean, let's just touch on that briefly, because the government has gone to war. It is an economic war, yeah, and in a war, the government takes a larger and larger role in society. Yeah, that's fine. We have to accept that. Okay. What is concerning is the erosion of civil liberties. So I can't short sell financial shares in the United Kingdom just now. That's a kind of change in my liberties. Yeah. Then we had a parliamentary committee last week propose that we put a ban on all you guys. That if the financial situation is dire, you get gagged. Now my point to you is we're only 1 year into this, and suddenly already our liberties are being brought in. So I think it's a valid point. Now, making money, you're still thinking the last 30 years. Yeah. For the last 30 years, the Dow Jones, at the end of 1974, so if you go back 34 years ago, the Dow had halved in the preceding 2 years. It was trading at 475 points. Last year it peaked at 14,700. It went up 30 times. That has never happened before. That is the Mississippi stock bubble. That is the South Sea bubble. Yeah. And people still are ingrained with, how do I make money? How do I make money? Forget it, guys. How do I preserve the money and the wealth that I have today? Yeah. And as we say, we're seeing the absurdity of a negative 10 basis point yield, right? There's 99% of hedge funds would love to have had a negative 10 basis point return for 2008. And I tell you, if you could promise me 6% next year, I'd take it today. I'd take it today, right? So let's wake up, let's recalibrate our thinking, and let's say, I'm still wealthy, and you know what? I want to be wealthy in a year's time and 10 years' time. I can show you the way there, but it's not by saying I'm going to double your money in the next 12 months.
I mean, but the industry, your portion of it and most portions of the industry have always been, it's been a product sales industry, and it has been so for 50 years. And the articulation, the changing of investor assumptions is something that I would imagine is a generational thing and not something that you can just turn on a dime. People have grown up with the assumption of 10% returns each year. They're going to have to change their minds.
It is generational. It's why, remember, the thing I always bore you with is this 25 years that the Dow famously peaked in 1929, but it was 25 years before we saw a new nominal high. It peaked in 1966, but it was 25 years before we saw a new real price high. And I've said to you, Japan, it peaked 18 years ago. And what happens is a generation suffers bereavement. Can you imagine in Japan, house prices have fallen 80%, commercial property's fallen 80%, the stock market's fallen 80%, your pension fund's fallen 80%. You don't feel good. And it takes 25 years to overcome that sense of devastation. So my point to you is we entered that awful period perhaps 10 years ago. So the good news is we've got 10 years out of the way. The bad news is we're still looking at another 10, 15 years. That's my point to you.
Right, let's move on now.
Again, the wider issue, remember what I was saying, for 34 years the Dow Jones and therefore all markets have had the greatest returns in economic history. And therefore the obsession has been, how does one keep up with an index? And so everyone benchmarks, and professional institutional investors, they measure risk by looking at their size of position, their portfolio versus the size in the FTSE or wider indices. That has to change. For 10 years now, the FTSE has gone up. In fact, the FTSE has gone down for 10 years. So you have benchmarked yourself to something which has fallen. And I'm telling you, that may continue for another 10 years.
Hugh, let's pick up with you here. A lot of viewers who remember your calls through the year on Yara and potash and other fertilizer and commodity-related businesses. And obviously these stocks have gone down with the rest of the market, and they are asking themselves, when you got out, I think, and they're asking themselves whether, if they're still in them, they should be selling at this point, or what they should do with their positions.
I think the most important thing, Jeff, there's two very important things, but, you know, this is not an authorised investment programme with stock recommendations. You know, I get sent to prison. I'm not a stockbroker, you know, I'm not in that business. I'm not in an advisory business. I come on and I tell people what I'm doing at a moment in time. And I buy things when they're going up and I sell them when they're going down. So if I mention names, it's because they're going up. If I don't own them today, it's because they've stopped going up and they've broken up trends, and I sell them. I'm very disciplined, and people have to be disciplined, especially in a year like today. The second important point I have to say is I just got commodities wrong. And especially agricultural commodities. I got them wrong. Not the only person, but I got them wrong. They have been devastated. They've been as devastated as financials or any other weak component of the stock market. They've been no store of value, and they've broken all of their most immediate trends. I would say to you that I still think that, unlike the financials, they probably have a future, and I think that in the new decade, from 2010 onwards, I think we could see quite a smart price recovery. I'm not as enthusiastic as to say that with regard to financials. Sure, you'll get a rally, but new price highs in British banks, I think you might have to wait 20 years. New price highs in agricultural stocks like Syngenta, Yara, potash, I still think you could see new price highs within the next 10 years. But with regard to 2008, I hold my hand up to you, Jeff, and anyone who's listened or taken my advice, and I have to say I got them wrong. But with regard to my funds and how I manage them, I'm very alert in getting things wrong. I deal with my mistakes rapidly, and that's why this year I'm up over 30%.